Sophie, how's it going? Um, awesome. All right, so today is, let me go ahead and do this. Today is February 18th, right? Now, let me go ahead and turn this down over here. Today is February 18th. Yesterday was President's Day. Some weird movements that were able to happen during President's Day, and that usually happens during those times because that's when banks, institutions, they have more type of manipulation in the market. So if you saw any unusual movements there yesterday, that's more likely why. That's when they have a lot of opportunities to inject their liquidity and so on. But right now, what I want you guys to see are going to be a couple pairs I have my eyes in, which is USD I also have my eye on GP JPY and USD CAD. Those are going to be the ones that I'm actually personally looking at when it comes to potential trading opportunities for the market. Now, I'm just waiting for certain criteria in order to enter. One of them is going to be just the area where it's going to be located, right? So I want to go and break this down real quick. Let's go with USD since it looks really, really nice. It looks really juicy, which is like how it's looking. Let's go on the 4-hour time frame and just go from there, okay? So 4-hour time frame. What we can clearly see market has been, trending to the upside. A lot of people were expecting for some rejection right here, so it can start going down. Now, I still expect that, okay? Now, understand that down over here, we have liquidity, okay? We have liquidity in this area. So that liquidity, I'm expecting for it to be taken out. But before it's taken out, I do expect market probably pulling up probably a couple of 10, 20 pips. So any limits, I'd be placing around limits in the 1030 psychological level or 1040 psychological level. Now, this area looked very, very crucial, very important. As far as this, if you went ahead and put your Fibonacci in this level from the top to the bottom, currently we're at that 78.5 area. Now, I wouldn't like for that candle to close above there. If it does close above the 78.5, then I am going to see this, go at least to 1030, which is 110.300. And that 110.300 could be getting rid of these highs over here. Let me go ahead and round this up for you guys so that you guys can see what I'm looking at. Okay, so 1110, 300, that'd be a really good area to short inside the market itself. Now, as far as that, we're going to go ahead and see right here. We see some type of rejection, okay? We see that the market respects this level right here. Let me go ahead and mark it down for you guys. That way you guys can see what I'm talking about. So if the market respects the 78.5, okay, which can be within this region right here, right over here. Okay, if you see some respect in that level, it's going to be perfect for potential shorting opportunities. Now, I don't want to, short right off the bat because even though that looks like a really good institutional point, right, I'm going to wait for the market to pull up at least to 1030 because that's going to give us that good divergence. I would like to see divergence to enter on this trade. Now, as far as entering on this trade, I would short all the way down to the 108 psychological level. The 108 psychological level, okay, it's going to be right about over here in this level, okay, 108 psychological level. So that would be about 130 pips that could be taken out of UJ. Now, understand that UJ it doesn't move as fast or as much, but the risk rewards are greater when you have this amount of pips, because if you are catching only 130 pips on this one, your risk reward can be a 10-to-1, a 9-to-1, or even greater, right? As difference when it comes to GBP pairs, GBP pairs can move 100, 200 pips in a day, and your risk reward isn't as much. It's probably going to be a 2-to-1 or 3-to-1 max, right? Because your stop loss is going to be around at 40, 50, 60 pips. Now, that's the only difference when it comes from, trading by pips and trading by risk reward. Previously, I used to trade a lot by pips, but I honestly, in my perspective, I do not like trading by pips because it's not as good as risk reward, because you can catch a lot of pips and not the same amount of profit out of that risk reward. Whoever wrote that right there, can do me a favor and delete it. I can't do it on my side. Don't want the Zoom to be ruined for the rest of the people. So right here, yes. Am I looking short? And let's say consideration. Let's put this in consideration. Let's say I do short. Okay. how would this look if I was to short where the market's currently at, right? One, I'd short it at a psychological level, which would be at probably 110. Okay, if I was to short it, and then, you know, stop loss would be right above over here, which would be like 6 pips, right? So that way our first take profit would be just taking out liquidity, which is about 50 pips. That would be a 9-to-1 risk reward. Now understand that there is a possibility for it to shoot up. Now that's one thing I want you guys to know. Is there a possibility for it to shoot up? Of course there is, because there's perfect highs printed over here in the past. As you guys can see, perfect highs over here printed in the past that have not been taken out. So I personally would like to take this one a lot more, which is a 110.300 level as a potential entry. Now also understand that it can or it can't go to that area. So these are risks that you take when it comes to trading. You take the risk of missing out on a trade, or you take the risk of entering on a losing trade, right? It just tends to happen. It's not going to always be perfect. There are winning streaks and there are losing streaks. It happens to everybody. Being able to understand the psychological aspect to maintain a strategy upon, you know, loss over loss over loss, will be able to help you out through the whole losing streak, still come out profitable or come out at break even or minimal losses, right? When you have perfect risk management. Same thing when it comes to risk management when you're on a winning streak. When you're on a winning streak, you still want to have that proper risk management, because if, let's say you're on a winning streak and you're 50% up, right? You took so long to gain that 50% growth in your account. You took, let's say, you took 2, 3, 4 months to get that 50% risk, right? And you every single time you're doing 1 to 2% risk, 1 to 2% risk, 1 to 2% risk. And then you get hyped up. You're seeing what the market's doing. You're like, you know what? Let's go ahead and risk 10% or 20%. And you lose. And when you lose, you never saw that big hit as much. So what's going to happen? You're going to want to enter again and again. And that's when you start losing, right? So here are 2 trading positions that you guys can go ahead and look at. Now this one is a 9-to-1 and this one is a 12-to-1. Now understand that this one, if it does go the way we want it to and takes out these areas, we would not take the full position there. We would just go ahead and take partials. So we can go ahead and let it run probably to the same area over here, which would be a 26-to-1, right? It'd be even greater. It'd be even better than this one. The only probability is that this one is a lot more higher probability for it to happen than this one. But I still like both of them, okay? I still like both of them. This right here is still a 10-to-1, okay? This is still a 10-to-1. So I personally will still take this trade. If there's some of you guys here from the 100K run, do me a favor and take this trade and just put a 0.25 risk on this trade, okay? If you guys are here, I know there's a couple of you guys on here. So do me a favor, take this trade, put the sell limit at 110.100. Stop loss at 115. Let's go ahead and run this up. And this is what we do, okay, for all you guys that are like wondering what's this 100K run thing. It's just it's something I got going on with a couple students. So sell limit at 110.100. Stop loss at 110.115. And take profit at 109.500. Do me a favor, also post it on the Telegram for those that are on here, please, from the 100K run. Okay, so going on that, this is a good trade, right? Let's say, put this in consideration while I'm talking to my 100K run students, right? If we're risking 0.25%, right? We're risking 0.25%, and we're gaining a 12-to-1 risk to reward, right? Sorry, it's a 1-to-12 risk to reward. That means that we're risking 0.25 to gain how much, right? Gain 3%, right? It's good, right? That's what we're looking for. Now, let's say you're risking 1%, you're gaining 12%. You're risking 0.50, you're gaining 6%. Those are things that you guys need to take into consideration when it comes to trading. Now, understand that this is possible for it to go through that. That's why I'm going ahead and finish another risk as a 0.25. Because there is the possibility of it going through 0.300. Now, this is the one that I really like. This is the juicy one. This is the one I like personally, which is the 0.300. But that doesn't mean I'm not going to take this one, because it can definitely still respect. This right here, what's happened right here, it's inducing a lot of buyers, right? It's inducing a lot of buyers. And it's already taking a lot of stop losses out. It's already doing it. So let's go ahead and check my other fib real quick. Yeah, we're currently at a 79 level. we're still good on this trade. I still like it. What can potentially happen? So we'll see how it ends up, right? 110.100. That'd be a good entry level, and that's a free trade for everybody. But like I said, the one I like the most is gonna be the UJ over here on the side. Okay, and expected draw. Now, why am I saying expected draw? Do you guys remember when that whole coronavirus thing was going on? Right? All safe payments, boom, drop, safe payments, and so on. And then, if you guys can tell me, what was one thing that came out next after the coronavirus? What do you think was the distraction? I talked about this on Instagram for a bit. What do you guys think was the distraction on the coronavirus thing that I put?
They had us tripping over some broom.
Exactly. There was a broom, the NASA, right? Talking about the broom, talking about something was going on with Earth. So all that focus left from people, going on safe havens, going into room, right? And right now it's just pricing in for possibly another type of scenario. Is just starting pumping more news out about more cases of coronavirus, more things like that, right? Things don't happen just because they happen, right? Things aren't just coincidence. You gotta be able to understand that everything happens for a reason, right? And just having that perspective. Right now we're running a EA in the Pips Profit Club. I'm more likely gonna take that off and just go based off of the own master account trading accounts. It was throwing a lot of trades today. Yesterday I didn't really like that. So now it's only gonna be like 3 to 5 or 6 or 7 max a week that are gonna be pumped out inside the Pips Profit Club for those that are in there and been wondering about all those trades. So this is UJ. Now let's go over to USD USD CAD. USD CAD, I want you guys to see this real quick. This is fairly simple. It happens a lot, and it happened with USD CAD, CAD JPY, which is one of my favorite pairs. What's happening right here? Okay, I want you guys to see this. I'm gonna go ahead and let's do this. Let's start from 0. This one's already marked up. I want to walk you guys through, my train of thought when it comes to this pair specifically, or this trade specifically. Okay. Now look at this. I actually uploaded on YouTube as well. If you guys don't follow me there, you guys can go ahead and see those uploads. So if you guys see right here, there's liquidity. Okay, liquidity is being provided right there. Now that this liquidity has been taken out, understand that this is a Wyckoff schematic. Right here, what is happening is that market is creating liquidity so it can be taken out. What's being created over here? We have a lot of money, right? Money sitting right there. And then we have an uptrend, getting rid of those liquidity point. And then we have a upthrust after distribution, right? Pushing market even higher. But what I liked out of this is that market took a big rollover to the downside. When it took this rollover to the downside, what ended up happening is that it went through 1, which is our structural level, and went through 2, our directional level. Okay, so structural level is going to be always the nearest higher low or low of the point, low point of the market or high point of the market, depending on what direction you're going into. And then the direction level is going to be the second low point or high point of the market, depending on the direction you're going into. So being able to understand what the market's going to give you in those areas is very crucial. If you can just trade based off of this, trust me, you are going to be able to learn a lot, and not just that, but take into consideration for when is the next upcoming trade. Now, not just this, but also taking consideration the other scenarios that you can also look at when it comes to this institution alongside with retail and also divergence, which is going to be very, very special as far as that is going to be when you go ahead and combine them, right? What can I combine right here? What could I have combining over here? You see there's liquidity, market pushed up once, pushed up again. What do you see over here? Divergence, right? Now, this would have been one confirmation. Divergence, I only look at divergence to help me confirm if it's going to be a positive trade for me to enter in, if it's going to have a positive reaction. Is it going to have an instant reaction, or is it going to take some time for it to move, right? I don't want to be in a trade when it's going to take some time to move. And I'm going to be honest, I'd rather be in a trade and hit my stop loss in the first 10, 15, 30 minutes than be in a trade and be profit losses. I just rather hit my stop loss right away, or go into profits, one or the other. But I don't want to be in the middle, right? And I know some of you guys probably are saying, like, why do you want to hit your stop loss right away? So I can get rid of that trade and go on to the next one. Forget about it, right? That's what we're looking at. Okay. So now if you can see, you have this whole distribution phase, and when you have a distribution phase, after market being taken out our low point and also our direction point, what is ending up to happening, and this is called a push momentum, right? We have this push of momentum, and when we see this push of momentum, we tend to look for a push of momentum retracement, which is going to be our golden pocket ratio. So I'm going to go ahead and place our golden pocket ratio from the top to the bottom of the market. So that way you can go ahead and look for those golden pocket ratios in the market. Okay. Now that golden pocket ratio is going to be 61.8, 71%, and our last ratio is going to be the 78.5% level in the market. Now, as we can see, whenever the market does this, it's always going to create some type of accumulation, right? What is this accumulation? This accumulation looks really, really clean. I actually like it. I haven't seen, the market set up this clean in a while, which is good. So we can see market creating lows right there, creating lows right here, equal lows, liquidity. And then we see a market running down those lows. Now, after running down those lows, if you want to be very, very precise, as far as the direction, you want it to break, once again, either your structure or even your direction. You want to have extra confirmation. In this case, it broke structure, which broke our liquidity, previous liquidity, and broke direction, which is now telling us there's going to be retracement, but then it's going to continue going to the upside. And that is exactly what's happening. Where can the market retrace to? If this is a accumulation phase, what is our last down counter before our last push to the upside? This right here. So market can more than likely tend to come down to this level right over here. Okay, so I'm gonna go ahead and round this up. Let's see if we can round it up to a nearest 100 level. That's gonna be a little bit too low. Let's go ahead and do this. 2.5. Okay, that's good. So 1.32325. That level could be an area where I'm looking for the market to potentially go up. Now, this doesn't mean I'm gonna long. Okay, this doesn't mean I'm gonna buy. Can you buy? Yes, you can. But the higher probability one is going to be to sell in this region right here. Okay. Now, where would I be selling? I'd be selling anywhere within this region right here. Anywhere within the 71%, right? Can it go to 61.8 and then retrace? Of course. But I would personally like this right here. For many of you that have been jumping on my sessions, you may know why. We have a point of interest over here, accumulation of price. Therefore, the market is going to act like a magnet in that region, and it's going to go ahead and tend to move to that level. Now, right now, market is pushing down rapidly. Okay, it's inducing sellers. It's also taking stop losses. So understand, if you go to the 1 hour time frame, you'll probably be able to see a little bit more certainty in this level. So look at this right here. So market come down. This would be in spring. Market goes up, comes down, goes up, goes down. So my levels to take in consideration are going to be where I left that currently, and then, sorry about that. Let me go ahead. I'm trying to clone this. There we go. And this right here. So it's like a 2.5 pip difference of the levels I'm looking into. I'm looking for the market to come into this region. I'm looking for it to come into that region so I can have some reaction to the upside and then continue on moving down, okay? Now, see what I played right here. I played distribution phase, push momentum, creates accumulation. Gonna go to that accumulation phase, touch it, and then go back up to our golden pocket ratio. So that way, then it can go ahead and short. Now, this would be a really good short. We would just have to see how far can we short. Now, you can clearly see that market has changed direction, right? We can clearly see that market has changed some type of direction, has changed our structure and direction level. So hopefully, we see that retracement to 61.8 or 71%, and then a drop to downside. That is USD CAD, okay? Now, UJ, you can clearly see what ended up happening. I think we spiked back up into there, did we? No, not yet. Okay, well, let's go to the 5 minute. Okay, still looks good. Okay, we'll see how this plays out. But as far as this one was also, okay, like it's very similar to the same scenario. We have equal highs, market comes down, equal highs, creates that up thrust after distribution, fall to the downside, right? Let's go and put that same Fibonacci level so we can see. When market comes down, Fibonacci from top to bottom, 61 to 71%. But now look at this. There was a low right here. But what caught my interest the most? Okay, unfilled this right here. So I was expecting for market to come back up to these levels and have some type of rejection. And as you can see, market came to that level, rejected, came to this level, and is rejecting. I hope to not see it go any further, but if it does go any further, we have that second entry at 110.300. But for now, this looks pretty solid. I really like the way it's working. I like the way it's playing out. Let's go to 2 hours. Sometimes you gotta move around some time frames just so you can have a better understanding of what's going on. Cleared out a lot of highs. Okay, a lot of money right here. And what we ended up fulfilling a false algorithm. Okay, a failure in the market. So a lot of people call it imbalance. A lot of people call it could be like a false gap. But in this case, what I want you guys to see is we only see a push of sellers. Okay, we only see sellers from one direction. That's when we see false algorithms in the market. Sorry about that.
Bless you.
Okay, thank you, appreciate it. Okay, so we're looking at UJ and UZCAD. Those are the higher probability trades. As far as this one right here, you can see this can be a 3, almost 4-to-1 risk reward. And the only reason why, because is this right here is 25 pips because it's at the wick of this over here. Okay, wick of the previous high. Now, if we go on time and place, it's gonna be a lot different. Now, another thing I want you to see, when market's pushing down over here, we already see on this market area that there was creating divergence, right? Divergence was being created when we have those equal lows and we have that spike to downside, which confirms this is going to be a very solid spring level. Now, understand that market can come to that level or it can come to this level right here. What level can be the okay? That's what you want to pay attention to. So, I don't know what that's doing. Okay, so that's what you want to pay attention to. You want to pay attention to these levels and see how the market is going to react. See, we have that rejection to the upside and then to the downside. So this rejection to the upside can be London, right? This can be London and then this can be New York. We'll see how that plays out. Over here, same scenario. The only difference is that we have created another highs and these highs haven't been taken out. So that's why there's 2 scenarios. There's one scenario with a 5 pip stop loss and there's another one with a 15 pip stop loss. 2 scenarios. If these were both to be breached, then I'm just not going to look at this pair anymore until I see something different. Okay, that's how easy it would be. When you see markets that hit your stop loss and you already placed all the scenarios, forget about it and go to the next one. Now, the reason why I see a market pulling back down over here is because all the liquidity that has been created, and on top of that, we have point of interest over here at the bottom that has not been fulfilled from current price. Okay, those are levels that I'm looking at right now. Euro USD, I really don't. I'm not even playing with this one no more. It's just sometimes you gotta understand that when you are trying to take a trade over trade on the same pair and it's not happening. And this is just like, this has just been falling for days. Like literally has been minimal retracements. So at this point, I'm not even gonna look at this trade at this pair until I see a bullish candle. That easy. When you see a market, you know, going down, and you expect for it to go up, and just doesn't, right? Just don't trade it that day. Wait for the next day, and wait till you see some bullish price action on the daily time frame. You don't see any bullish price action on the daily time frame. Don't even do anything. It's not going to be worth it. As you can see over here, market came down, bullish price action, then moved up, and then continue going to the downside. Right here, this is not bullish price action. That's just indecision, right? Market didn't do nothing. Okay, so be able to sometimes stay away from those areas. GP and GD, not really looking at this. I haven't looked at GP pairs for a while now. GJ, I am looking at GJ, but I still see the market can probably pull up before going down. I would like for GJ to start falling, and this would be able to coordinate with UJ, right? Just taking consideration that it's very sloppy right now, right? It's in the middle of everything. It's big consolidating. Sorry about that. It's been consolidating with a 300 pip range. Now, 300 pips is a lot. Now, taking consideration that it's been consolidating within that range, so it's just been going up, down, up, down, up, down. The way this could have been taken advantage is, you know, buying the highs and buying the lows of those levels. Because even though this pair consolidates within those ranges, those are pretty good ranges. Those are 360, 350, 320 pip ranges, unlike other pairs. So right now, only pairs in sight is UJ and USD CAD. Those are going to be the only pairs I'm looking at. Now, let's say UJ hits a good winner, right? We start falling and we go to that 60 pips. That's a 12 to 1 risk reward. We continue falling and go all the way to this level over here that we wanted. That's a 32 to 1 risk reward, right? 32% in your account. That's pretty good, right? With only 160 pips. I know a lot of people try to go for pips, try to do this, but understand that pips can only get you so far. And pips also avoid you from having the full comprehension what risk management is. And risk management is the whole game of trading, right? If you don't have proper risk management, it's going to be kind of hard for you to actually become a really good trader over time or full-time trader, right? Because sometimes it's going to happen. You're going to have your losses, right? You're going to have your streaks. I'm not going to lie. I'm a human too. I've had a streak for a month and a half now, a bad streak, right? It's not a good streak. It's been a bad streak that I've had for a month and a half now, but I've still been able to maintain my account. I've still been able to live off of my account because I had that proper risk management, right? And you're only going to get to that point if you're able to grow your account with proper risk management, because things like that are going to happen, right? This month and a half from, having that bad streak, it could have been like, you know what? Hey, Mauricio, go take your vacations, right? That's like my vacations. It's a pretty shitty vacation, to be honest, but you guys know what I mean, right? You sometimes got to prepare for things like that, right? Here, it is not a sprint. It is a marathon. Being able to understand what the market does and being able to adapt to it and comprehend it, right? Not all trades are positive. But as long as you have the knowledge and you are able to maintain and retain it, right, and apply it, is what really pays off, right? A lot of people pay for signals. A lot of people pay for, things like that. But at the end of the day, if you don't know what those signals are really doing for you, if you don't know if that's going to go up or it's going to go down without the prior knowledge of it, it's going to be kind of hard for you to learn when you decide to jump out. Okay, so right now, UJ, I'm still looking to sell onto this. And actually right now on Pitch Profit Club, we implemented two pre-recorded lessons and 4 live analysis lessons for the week. So that's like about, it's pretty good. It's only $37 at the moment. I'll go ahead and add a link right here in the Zoom for those that want to jump in Pitch Profit Club. Overall, it's based off of knowledge, which I would consider you guys to do it for the knowledge, not so much for the signals, more for the knowledge than anything. Signals are just extra, right? Those are just an extra bonus when it comes to understanding Pitch Profit Club. UJ is going to be my favorite pair. If you guys have any other pair you would like me to view, go ahead and type it down. I'll go over 1 or 2 pairs max, but for now I want you guys to know that UJ and USD CAD are going to be my favorite pick for the week. And these two can go ahead and do, I was looking at gold. Actually, and I didn't really like what it did yesterday. I actually traded this one yesterday. I did not respect what I wanted it to do, and it just kept on going up. So I'm not really going to look into gold, and I'm going to tell you the reason why is because what I was expecting for the market to do is to respect this level. I was never seeing gold going back to 1600, but this right here, this what happened is it going to 1600 is what's telling me, hey, safe havens are going to start pushing, right? Gold, okay, this is what happens. Gold always pushes before there's something taken out to media. And that's why I'm preparing for safe havens. Now, that's a good tip that you guys can have in consideration. If you see unexpected movements on gold like this, it's because there is something to come in the near future. So start looking for levels, or start looking for verifications on safe havens on what can happen. Now, gold already left. Usually when there's a big news, for example, I don't know if you guys remember, there was a bombing, I think it was in Iraq or Iran, I'm not really sure, but one of those, when there was that bombing, right, everybody expected for gold to push up, right? Instead of pushing up, what happened? It pushed down, which doesn't make sense, right? But before it pushed down, what did it do, right? It was pushing up already, very, very heavily. Pushed down when the market when that happened, but the ones that have the instant reaction, okay, of the market is going to be USD JPY. USD JPY always have instant reaction of the market when it comes to something negatively happening in the global economy. Okay, so that is why you look at gold as a safe haven, the primary safe haven that can lead you towards potential tips or tricks or even hints in the market that's going to happen, right? So I'm not taking, me personally, I'm not taking any trades on gold. I'm looking for shorting gold. And I'm going to short gold once I see that news come up. So I don't know, we might see in the next 2 or 3 days, or probably next week or a week or a half or two from now, on the news, something talking about coronavirus again, or talking about another disease. You don't know, right? Just take that in consideration that gold always moves in front before any other safe havens. And then UJ is going to be the one that's going to have the instant reaction. And it's going to be having a big reaction, right? They have heavy reactions. I don't know if you guys remember 2019, we had that flash crash. This big move, right? It was like 500 pips or something like that. Yeah, like almost 700 pips. But the flash crash was like within the same hour right here. Yeah, like 400 and almost 500 pips. I have a friend that made like 32 G's off of that. He wasn't expecting that, but you know, a lot of people made a lot of money from that. A lot of people made a lot of money from that. A lot of people lost a lot of money from that. People that were going with the direction, people that were going with the trend, they made a lot of money. Especially if they didn't have take profits, right? Sometimes that's why sometimes I don't use take profits. I rather have a trailing stop loss, or I rather just modify my stop loss to break even when I get the chance of doing so, right? So those are things that you want to take into consideration when you start trading. Having a set target, yes, always have a set target, but also be able to adapt. Okay, understand that you need to be adaptable when it comes to trading. Being able to adapt is going to give you a lot more profit, because once you adapt to this, let's say you're 20 pips in profit, right? Move to break even. You're break even. You come over liquidity. Move this over here. Take partials when that happens, right? And you maximize your wins and minimize your losses. Okay. So with that said, hope everybody enjoyed today's lesson. I will be doing another session, another free session, and within the week, I'll let you guys know on Instagram. So that way you guys can go ahead and check that and jump on the next one. It's gonna be going over specifically divergence for you guys. I'm starting to pump out a lot of free content, just because I've been out for a moment, and I do want to go ahead and provide as much as I can during this next month coming up, which is gonna be March Madness. I usually always do things on March Madness. This March Madness, I'm just gonna be putting a lot of information. I'm gonna be putting a lot of information for you guys. Just giving back to the community, and hope you guys enjoy that. So with that said, hope you guys have a great night today. I'll go ahead and put the link today on a swipe up on IG for those that want to go ahead and join the Pitch Profit Club. Awesome. And this will also be uploaded to YouTube. Okay. So for those that want to go ahead and see the videos that I do upload on YouTube, go ahead and subscribe on that side. I'll see you guys in the next one. Hope you guys have a great night. Bye.
Thank you.